You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that rockin' bit of tunage means it's time once again for TWIFO, This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. We're going to break down whatever the heck is trading, what's lighting it up over there on CME land this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Our buddy Sean is traveling hither and yon again this week. I'm not sure which time zone, which region of the world he is in, but joining me, holding down the old CME Group hot seat today. I do believe we have him. We shall see. Mr. Russell Rhoads, the Director of Derivatives Research over there at TABB Group. Mr. Rhoads, are you there, sir?
I'm here.
All right.
All right.
You can hear you. You can be heard. It works.
They put me in the bowels of Loyola. You know, I went from being the top dog at an unnamed exchange on this show, and now I'm like the junior most clinical professor in the basement, kind of like Melvin from Office Space. And somebody did just steal my stapler today.
Uh-oh. See, everything old is new again. So
bad day, man.
Back to the basement for you, sir. But you know, we like you here. We don't put you in the basement. We put you in the hot seat. We put you in the hot seat here. So let's kick it off. Let's kick it off as we are wont to do. Let's look at what is exactly lighting it up. What's moving and shaking over there. You guys can play along with the home game. As always, cmegroup.com/TWIFO, TWIFO. You go there, you'll see exactly what I'm looking at. If you want to do the movers and shakers reports for yourself, then go to that market scans tab. And then make sure you set the date range, I should say, for 1 week. And you'll be able to see what I'm looking at here. If you do that, Mr. Rhoads, I always let our guests choose. Should we start dark side or light side in terms of upside or downside this week?
Let's do upside movers. I'm all about being bullish.
Everyone's so optimistic on this show. So upside, let's see. Number 5, we've got soybean oil. Don't see that one on the list very often. Up 3.3% this week. Number 4, lumber. Up 3.54%. Working with my little guy on decimals, tenths and hundredths and thousands of decimal points. You'll see why we got out that far to the hundredths in a little bit, because number 3 is platinum, up 3.55%. So lumber hot on his heels. And number 2, our old friend WTI, nearly topping the list this week, up about almost 4.2%. And number 1 with the bullet, Class 3 milk. Not a name we talk about a lot here on the show, up 4.5%. Now, to the dark side, to the downside. Number 5 on the downside here. So the least loser, I suppose you could say. So I guess technically maybe they're the winner. Is corn, off about 1.75%. Number 4, rough rice, off 2.3%. Number 3, KC wheat, off 2.5%. Number 2, nat gas, off 3%, about 2.95% or so. And then number 1 with a bullet to the downside, lean hogs, off nearly 6%.
Still have our bacon and milk together, and they just kind of offset each other?
They do. Did I see you were tweeting something about lean hogs earlier, sir?
No, not me, lean hogs, no.
Not you? Okay, well, I guess it was someone else. It was the other Russell Rhodes.
I'm the Bitcoin, not the bacon.
You did retweet about lean hog options. You retweeted that from CME, so there you go. I am correct.
Oh, I did retweet that, yeah.
You stand corrected. I stand correct.
I do stand correct. Trust me. We know, you know of my household, and you know that I am always being corrected. That's
probably true. You got a bunch of ladies floating around there, and they don't take any guff from you, sir.
No, they do not, as they shouldn't.
Let's start weird, because it's not a name we get to talk about a lot, it doesn't really top our list a lot. Class 3 milk is topping the list to the upside. We don't get to talk dairy a lot. I've tried to get some dairy folks on here. A lot of them don't like to talk because there's not a lot going on. That hasn't been the case over the past couple of months, actually. In fact, CME tweeting out just recently, just a couple days ago, I think, block cheese prices rallying to a 5-year high before falling back to $2. Global prices remain well below U.S. levels. In fact, they put out a whole dairy outlook report here. Let's look at it really quickly and see what's lighting it up, saying there's plenty of day-to-day excitement in U.S. dairy markets over the last month. Cheese prices spiking to 5-year highs. NFDM, I believe that is non-fat dry milk. Look at me, crushing the dairy acronyms. Market awakening after months of slumber. Butter prices sliding to the lowest point since early 2018. So dairy actually lighting it up here these days, listeners. Who knew? Who'd have thunk it? Milk and dairy product supplies in the U.S. remain tight for the most part, but milk production expected to pick up into 2020. The cycle for high milk price expected to occur in Q4 of 2019, so we're coming into that right now, and then prices expected to moderate. So let's see after all that. Let's head on over to the TWIFO machine. Let's flip on. You got to go out to ag, listeners, and then you got to go down to the dairy drop down, and you'll see right at the top there, Class 3 milk. And, it's not a huge option story, but when compared to things like lean hogs, it's a monster. Like I said, off nearly 5%. What was that number? 4 and let's see. Yeah, about 4.5% here this week. The vol up pretty much across the board. Not perhaps as firm as you might think, but pretty decently up about a point and change out there in that most active contract out there, which is, of course, the Nove doing 54.5% of the volume this week. And we're at threatening, well, it depends what future you're looking at. Let's look at that Nove future. It's at about a 1940. And the 19 call is where the action was this week. A whopping 441 listeners going up this week, which is actually pretty decent for Class 3 milk. And let's see, lion's share of that coming on Monday, 341 and 100. The rest of that scattered throughout the week. Let's look really quickly, because how often do we get the chance to talk about call skew and option skew in general here? In milk, let's go out to Nove where the action was this week. The puts were cheap, 2.4% cheap last week. This week, far cheaper, almost 9.5% cheap. And the calls were bid 3.9% rich. This week, only 0.6% rich. So calls coming in, puts getting bid. Interesting stuff. Mr. Rhodes, I'm going to go out on a limb and say that dairy is probably not a top of your research schedule over there in TABB land. Am I correct?
Can I give you my experience with the dairy trading?
Please.
In the early 90s when I was on the floor of the CME group, I don't know if they still do this, but they traded these things using a whiteboard. and I brushed right against the whiteboard and erased a couple of prices. And if you do that, you never, ever do that again. So there is my dairy, that's my dairy story, man. I'm sticking with it. So, no. But looking at this skew, it's pretty interesting.
Yes.
It's to the downside, is what I can tell. So maybe, maybe people are worried about a drop in the prices. Is this not a market that's been hung up in some of the tariff stuff?
Yes, the trade war stuff obviously impacts demand and indeed supply of this stuff here domestically and international demand as well. So like a lot of the ag complex, it is very much trade war driven these days. I got a feeling, Mr. Rhodes, maybe we're going to see some Class 3 milk emerging on some TABB research report soon. What do you think?
Well, I'm working on something where I'm taking a look at things people don't really think about that actually do trade. Maybe people that are looking around for different things to trade or something to keep an eye on in case there's volatility spiking up. And with 400 contracts outstanding, man, I might just have to include this in the report.
I like that. That's a good idea for a report. Things that you don't think about that actually trade. I like that.
Just, it's, every time I'm on here, we talk about Eurodollars, and I'm sure we'll talk about it again. But it's not, even though it trades heavily, you don't see a lot of, I don't think you see a wide range of participants. You know what I mean? It's not like, ESE minis that everybody trades. So that's kind of where I'm going with that report, is maybe to give some people some ideas of where to trade when the equity volatility gets sucked out again.
Yeah, we did a deep dive into Eurodollars last week. So hopefully we'll make me do it again, but maybe we can't. That's one of those products that's such a beast to get the audience to grips with. It's kind of fun. But since you are our guest, Mr. Rhodes, I will allow you to choose of all those different product categories we just talked about. Maybe some others are on your radar. Where should we hang our hat next, sir?
Let's do interest rates real quick and get it over with.
Where in the rates do you want to go?
Well, the Eurodollar thing, did you guys talk about the potential negative rate trades?
We touched on it a little bit last week, but if you want to go into it in more detail, have at it.
It got written up in the journal, and in the days that I had to prepare for today's program, I did a little bit of digging, and it looks to me like some of those trades were put on. One of the big trades that's a couple of years out was put on back in January, and another one was put on in June. And I have a theory behind this that I don't think anybody else has put out there, but if they have, I didn't steal it from them. Over in Europe, they've got negative rates, but banks are still having to pay positive rates. So I wonder if this is an instance of banks being prepared to continue to be able to pay positive interest rates to depositors if interest rates go negative here, but they're not necessarily betting that interest rates are going to go negative. So maybe it's a hedge against that, because one of the big differences between European banks and U.S. banks right now as far as earnings goes is the European banks have to pay interest when there's no yield for them to find anywhere, whereas we still do have slightly positive rates here in the U.S.
Yeah, and we'll learn more about the rates situation next week. Speaking of which, really quickly, since we're talking about rates, let's swing on over to the old FedWatch, a tool everybody knows and loves and is quoted widely out there, which is, of course, looking at the probabilities for a cut coming up next week. In case you're wondering, we have exactly 5 days, 23 hours and 16 minutes to the next FOMC meeting. Listeners, you guys can, of course, find that. Just search for CME Group or just search for FedWatch. It should come up there. And if you do that, you should see exactly where we are right now. Looks like the market, Mr. Rhodes, liking themselves a little bit of downside here to the tune of 93.5% probability right now for a 25 basis point cut. Only 6.5% saying we're staying where we are. Are you buying what they're selling here, or you think maybe that's a little bit overdone?
I do not think that's overdone. I think that one is baked in. But if you if you start to go farther out, the attitude is we're getting that one, and that's the last one, and you're going to get nothing and like it until I think March after that. And I believe that the language is what people will focus on to see if the attitude about another cut changes or not.
Yeah, it's kind of hard to imagine too many more, right? The gun's kind of running out of bullets. Right. I mean, they got a few more maybe in the chamber, and they probably should hold on to those in case something serious comes to pass. That's why I'm kind of surprised they've been squeezed into one more, but it seems like the market overwhelmingly looking for that. So we'll see. But by the time we do our show next week, listeners, we'll know if the market was correct. Let's go on out here to Eurodollars. Mr. Rhodes, this is one of those products where I'm very scared to do what I normally do, which is hit the select all button over there on the drop down, because that gives you all the months. When you do that in Eurodollars, you get a lot of freaking data. I did that, and I'm scrolling for days now as a result. But this is a product, we talked about, 400 contracts in fluid milk there. Total, I think, of 5,400 for the entire complex. Now we're talking about Eurodollars here. We're just talking about the Ds. These are just the front Ds. I believe these are the whites here. There's other colors and other strips and other Ds. Let's just talk about one call in 1 month, in just one series here. This is not even close to the whole complex here in Eurodollars. To get a taste how much paper we're talking about. It's, oh yes, I miss the old quoting in eighths and sixteenths, Mr. Rhodes. Those were the good old days. The old 98 and 3/8 call here in the Ds. This is that Ds contract going out in 52 days and change, doing 93,000, and it was tight. It was their other contracts doing over 90,000 this week as well, so it was a tight race for number one. 93,951 contracts in just this one call. It almost boggles the mind, the paper that is going up out here. The lion's share of that listener is coming up on Tuesday with nearly 50,000 of that 93,000, 49,922 to be precise, going up on Tuesday. The rest obviously scattered throughout the week. Slightly biased towards opening, but only a little bit. So obviously a lot of back and forth on that strike. That's obviously pretty close, right around the at-the-money strike there. So that's where the action was this week. Let's look really quickly, parse some skew here. Last week, the puts were cheap, 5.2% cheap. This week, they are 11.2% to be precise, cheaper to the at-the-money. The calls were bid last week, 8% rich. This week, 5.5% rich. So call still bid, but not quite as much. Vol also off aggressively out here, off almost 3 handles in this one D's contract alone. And you go farther out the term structure, it's still pretty firm to the downside, off 2 points, 3 points. So vol getting annihilated out here in the Eurodollars, Mr. Rhodes. What is your research report? What have you found about the Eurodollar so far that's compelling? You want to convey it out there, particularly to, let's say, a retail audience who doesn't really usually look at Eurodollars.
Well, the vol has actually, I've started including some things about the options on futures, and it's why you have me on in the monthly report that we put out. And the vol has been pretty much elevated for all the really actively traded markets at CME Group until last month, and it really started to see kind of a drifting lower in several of the markets. I'm struggling here to pull up my charts behind this. But I do know that Eurodollars had fallen back down to the mid-range from kind of being elevated over the last few months. And, that probably goes along with what we were just talking about with respect to this being the last cut and nothing expected until March. It's going to be a long, cold, boring winter. And if nothing is expected to change in the rate area for 6 months, you're not going to see a lot of volatility in the option contracts. So I think that's almost a confirmation. I've never really thought about coinciding what's going on and I look at average 30-day at-the-money implied volatility using the different option markets. And you got to figure if the market really does believe that this is the last one, that you'll just see that volatility continue to drift lower.
Yeah, getting annihilated out there. Eurodollar vol just annihilated here again this week. So maybe that's one of the stories here. And we've had many events in that space, obviously the punting of Brexit and everything else along those lines, but there still are more events, more shoes to drop, namely next week here on the domestic rates front, and yet they're crushing the vol, which is kind of interesting out here in Eurodollars. All right, Mr. Rhodes, you're our guest. Where do you want to hang your hat next?
Oh, God, you want to do equities real quick?
What are you talking? What are equities? What are these?
ES. The equity futures, the S&P futures,
okay.
The Russell futures, my favorite.
We can do that. Let's head on out to the equities complex. Listeners, of course, head on down to that drop down. Click on equity indices. Go to the E-mini. Let's start in Russell land because Sean's not here. I know his ears are burning right now, so we'll make him jealous that he's not on. Equities, kind of a weird one here on the week. Markets I guess kind of slightly back in rally mode, kind of giving a lot of that up now. Dow was actually off on the day. S&P was rallying slightly, kind of unched now. NASDAQ was where the upside action was today, firmly up about over 0.5%. Coming into showtime here, we saw the VIX at a little bit shy of the 14 handle, like 13.8, 13.75 or so. Puts it off about half a handle from where it was on our last show. Our old friend, the volatility, VVIX down to about 86.5. So that's also come off quite a bit. It was triple digits not too long ago. It was over 100. Now getting back to 86.5. You know, if you listen to our Volatility View show listeners, you know when things start getting into that 70 handle, pay attention. Vol's going somewhere. It doesn't stay there for too long. Not quite there yet, but getting there. And then our old friend RVX, a.k.a. the Russell VIX, a.k.a. the thing. I had a conversation with our friends over there at the SIBO just recently. I hit the network today, actually, and I asked them specifically about bringing back RVX. So hopefully, if you like Russell volatility and VIX, check that out. See what they say. My answer might surprise you, but I held their feet to the fire for all you Russell fans out there who want some more small cap vol. Just want some more vol products to trade. I get you. RVX, weirdly enough, yet again, almost exactly unched. It was at about a 1770 and change last week, at about a 1768 coming into showtime today. So second week we've seen now here in the last month where RVX weirdly unched week over week. You don't see that too often with S&P vol, a.k.a. VIX, but we are seeing that a few times here with RVX. And that spread, that means that VIX RVX spread is kind of unched from where it was last week. It's about slightly wider, a little bit shy of the 4 points out here. Mr. Rhodes, when you used to watch RVX quite a bit, and I know you did back in the day when it was listed in your former life, did it surprise you it would kind of stick here? Because it's kind of been unched for a little bit.
Yeah, especially because the other one's going down, you know? I would expect both of them to drift together, and if anything, my understanding is the last few days, the Russell 2000's been outperforming the S&P 500, and that kind of price action would make you think that maybe we would see a little bit more downside pressure on RVX when you compare it to VIX. And I always like to compare it to VIX. I just always felt like it was a great small cap versus large cap and domestic versus international type of indicator. Maybe it's holding up even though the underlying the Russell 2000's doing okay because if the current president's not president for much longer, then nobody's going to make America great again, and that's not good for domestic stocks.
There we go. Yes,
there's a stretch.
That's exactly what's being priced in here as we speak. Speaking of what's being priced in, let's go out. You asked for the ES, so let's go to the E-mini S&P 500. Let's see what's lighting it up out here. An interesting week, like you mentioned. We're up kind of about a little more than 0.5%, so getting a little bit of a lift back in here on the S&P here with about the vol, of course, coming off. Equities are up, vols off. That's kind of the deal out there in equity land. Let's see what's number one with the bullet out here. And let's see, the 30-20s going out in the front week and the day to go are pretty active. But actually, it's the 3,100 calls. And again, I made the choice, some might say the error, but I like it, the choice to hit select all, and then you get overwhelmed with the data. We're going all the way out to DEES, though. DEES 3,100s are where the action was this week in the E-mini S&P. The DEES accounting for about 20% of the paper, so it shows how kind of spread out the paper was out here as opposed to something like crude or gold where you see a lot of that aggregated in that kind of nearer term contract. Let's see, 3,100. So we're at about a 3,005 right now on the S&P listeners. So 3,100 in DEES was where the action was opening throughout the week. The lion's share, 15,000 and change went up this week. The lion's share, 5,500 going up on Monday, 4,700 on Tuesday. The rest kind of scattered throughout the week. And a decent chunk of that opening. So opening on the 3,100 side, which is kind of interesting. Usually in equity land, that's probably overwrites, but you never know out here. That's pretty far out, 3,100. But again, that's not as far as it seemed even a few weeks ago. All of a sudden, 3,100 seems like a far more doable type thing. Since we're talking D's, let's look at the skew really quickly. The puts were cheap last week. That's going to be bid last week. That'd be fun if they were cheap. That would be a weird time in the equity land. They were bid 23%. This week, they're 26.5%. So puts getting a little bit more bid out here in D's. And the calls, of course, were offered. They were 14.3% cheap to the at-the-money. This week, nearly 18%, 17.8%. So calls coming in, puts getting bid on a week when the indice is kind of rallying. That kind of makes sense, Mr. Rhodes. Anything floating your boat out here in E-mini land?
The only thing I wanted to say, you had me on a week earlier than I wanted to be on. I just finished a product usage paper about that's all about using S&P E-mini options and 3 different consistent strategies that perform fairly well. One of them is like it's basically the same risk as a 2-time leveraged ETF and gives you better returns. One's like a buy and hold, but a little bit of an out-of-the-money buy right, and the other one's actually replicating the old BXM using futures and options on futures, and it actually outperforms using options on futures, the regular BXM. But you have to wait because it's not coming out until like Monday.
You're teasing us here, sir.
I'm teasing. Well, I was going to call you up on Monday and go, hey, look at this report. Let's talk about it on TWIFO.
The TWIFO gods, sir, they're demanding.
They got me here early. I'm fine. I love being here.
They need you. They need you here when they need you here. That's just how the TWIFO gods roll, sir. I don't control them. I'm also at the mercy of the TWIFO gods, sir.
I know you are.
The whims of futures options control us all at the end of the day. All right, equities, where else you want to check in this week, sir?
You want to go to crude oil?
I never heard of it. What is this? What is this crude oil?
I know. You know.
All right, we'll do it. Actually, it's been a little while since we've checked in. We did a lot of nat gas of late. But crude oil, you're right, is on the list. WTI is up at number 2, up 4.16% this week. So head on over to that drop-down, listeners, and grab it on the energy side. And then head on over to crude oil, WTI, the top of that list there. And you'll see exactly what we're talking about here. And this week, again, WTI obviously moving pretty strong. It's up even more since we scanned it for the start of the show. It's up nearly 4.4% now, which puts it almost tied with Class 3 milk. Not quite, but close. About 0.1% separating those two market movers this week. WTI at about a 56 coming into showtime, 56 and a quarter or so. So back up north of that 55 handle with some change to boot. A little bit of upside. It's been a while since we've had some upside to talk about here in WTI, but it sounds like things are perhaps looking up. By the way, speaking of which, Mr. Rhodes, interestingly enough, a lot of people talking out here in WTI before we get into the specifics of the contract. Our friends over there in Goldman, as they are wont to do, making far-reaching predictions for the for the crude market, coming out here recently and saying a worsening supply glut in 2020, but then beyond that, so they're going pretty far out here. They're saying it looks like things could be looking up for crude. They're saying for 3 years, oversupply has deteriorated energy equity sentiment. That's analyst speak, if ever I heard it. But they're saying, however, U.S. shale oil is indeed slowing down, and as more shale drillers bite the dust, the slowdown could help the market rebalance, which could lead to a more durable price rally. And they believe this inflection point for the warm turning in crude could be around a year away. Mr. Rhodes, as a competing analyst / researcher, what do you think about that, sir?
I'm not exactly a competing researcher with those guys, but
you play in the same space.
It's hard to disagree with the whole idea that crude's not going to go anywhere for some time. Not necessarily just from the supply-demand side of things, but it's such a leveraged market as far as just a little bit of a drop in demand can have a dramatic impact on prices. And if we really are seeing some sort of economic slowdown, you just got to assume that on the demand side, you're just not going to see the kind of increase in demand that you need to really get the price going to the upside. But at the same time, I am looking at the skew, and it looks to me like the option skew is, and tell me if I'm reading this wrong, because I never feel like I'm totally reading the quick strike things correctly. But it looks to me like the skew is really more concerned about the upside right now.
Well, let's look here. I pulled it up here. Again, listeners, you can find that on the report. Looking out here to DEES, because DEES is where the action was this week. 58.9% of the paper going up in that DEES contract. The contract was up this week. Obviously, Goldman talking it up a little bit. Maybe some of the kerfuffle over there in the Middle East having to do with that as well. Either way, obviously some domestic supply issues always weighing on that as well. But the crude is up, the vol is off, and that DEES contract off over a point, about 1.5 handles almost out here. Let's look at the skew. Let's see what Mr. Rhodes is finding out here. We're seeing last week the puts were bid. The puts were almost 0.5% rich to the at-the-money. This week, they are more bid. They are 2.5% rich. Not a ton, but a little bit more bid out here on the put side. As for the calls were rich last week. They were 1.8%, almost 2% rich to the at the money. This week, they are 0.8% cheap. So they are coming in a little bit there on the Ds. Are you looking at Ds, Mr. Rhodes, or are you looking somewhere else?
I am looking at Ds. I need to come in the studio and get a tutorial.
Yes, it is. When you first look at it, it is a lot to wrap your head around the skew notation.
I got to get a tutorial.
I'll tell you what. I got some pull. I know some people.
You as everybody in Chicago, you got a guy.
I got a guy, so I can put you in touch with some folks who can give you an explainer on all this good stuff. So it seems like the skew moved a little bit out here this week, but it seems like the calls were more bid last week, and now the puts are catching a little bit of a bid this week. So maybe some folks may be starting to fade this rally a little bit. Either way, we'll see. It's been a while since we've seen the call skew able to maintain a bid out here, and that seems to be the case again this week, but not a huge move out there really either way. The 60 calls are where the action was this week, which is a near out-of-the-money call now. I couldn't say that too long ago, but now 60 strike seems a lot nearer than it did a couple of weeks ago. Let's see, about 12, almost 13,000 going up this week. The lion's share actually today, 48.86. Yesterday, 44.45. The rest kind of scattered throughout the week. Slightly opening, but again, we don't know today's numbers. Those just went up. Then behind that, number two are, let's see, the 70.5 calls. That's an interesting one. I would not have picked that. Doing a 9,500 or so. The lion's share yesterday, 6,200 going up yesterday. A decent chunk of that closing. So someone sounds like getting the heck out of Dodge on some farther out of the money calls here in D's. Interesting. 70.5. I would not have anticipated that strike lighting it up. Let's look really quickly. I like to do some farther out scans to see if we see any weird. So this is the nice thing about trading select all, listeners. You can find all of the weird stuff as well. Not a heck of a lot of weird stuff on the tape here this week from a crude perspective. Let's see. 50 puts doing, these are out here in June of next year doing 7,400. So if you like a little bit of downside, 50 puts isn't that far down, but that's kind of interesting. Outside of that, not a lot of size strange prints here, listeners, catching our eye here in crude this week. Mr. Rhodes, any interesting research coming across your desk in the land of energy options these days, sir?
No, energy, it's just been so range bound, and basically, you mentioned that the call skew seems to never be able to catch a bid, and even that day that we had the spike when they blew up the giant refinery in Saudi Arabia, about midday, there's a really smart energy trader that I talk to periodically, and she pointed out that the out of the money calls were just kind of started to fall apart just an hour or two into the U.S. trading session. And sure enough, that spike was the near-term high. But every time we seem to get a little bit of a rally in oil, you'll see the skew move up just a little bit, and then it kind of tops out and starts coming in, and then the rally fades. So, the whole range thing has worked particularly well. And I think it's always shown up more on the call side than the put side. So if I was told that I had to have a position, if I had to either go long or short in the March contract right now, and I had to hold it through March expiration, I'd say short.
Interesting, sir. I think you were on shortly after that Saudi attack, were you not?
I was.
You and I were marveling at just how weak the skew remained a few days later, right? It seemed like if anything was going to do it, that was the week, right? That was the week that was going to cause those calls to get some love, and it lasted, like a half a day, right? That was about it.
Yeah. It was just a silly, weak move. I mean, it was a strong move in the underlying, but the non-confirmation, if you're paying attention to the skew, it gave you a really great shot to get short there.
Speaking of skew, they're not on our movers and shakers this week, but I do want to touch on this complex really quick. I guess platinum, I think, was there on the metals. Say platinum up 3.5% this week. I want to talk on metals really quick, Mr. Rhodes, because an interesting report came out from our friend Mr. Eric Norland over there on the research team at CME, and I think our audience will find it interesting. You can find it yourselves, listeners. Type in gold and silver options pointing to a pullback. If you just go to the CME website, they put that stuff from Blue and Eric front and center on the homepage, so click on it. It should be right there. An interesting analysis. Eric likes himself a little bit of skew analysis, and that's exactly what he's doing here. He's talking, this report, I encourage you to read it for yourselves. It's pretty lengthy. It's got a lot of great visuals and charts along with it. But he's saying gold and silver has had powerful rallies over the past 15 months, so it's not surprising both of them came off a little bit in September, early October, after rising 30% in August, In early September, gold correcting by about 6.5%. Silver's bull market began earlier in May. Price rallied about 35% over the summer and has corrected about 14% recently. Interestingly enough, though, he said immediately prior to those declines, he saw the options market signaling that a correction could be on the way because he looked at the skew, in particular the out-of-the-money calls, became exceptionally expensive for both gold and silver just before the correction. He's got a great couple of charts here. He looked at an interesting measure of it. Most people like, the 25 delta call, 25 delta put, so the 50 delta risk reversal. He's looking more a little bit tighter at the 30 delta risk reversal, so a 15 delta call, 15 delta put, a little bit closer to the at the money, but the analysis is still the same. He said for both gold and silver options, a 2-year rolling index of their risk reversal skewness, and this is another one, you look at it as a chart. It makes it a little easier. Both of them got into the 99th percentile right before their corrections. He says over the past decade, when that skewness has reached that extreme level, gold and silver have often underperformed over the next 3-month period, and that appears to be the case here again. Let's see. On October 11th, gold risk reversal skew, this is that tight risk reversal, 15 delta call, 15 delta put, was still in the 80th percentile. Silver's was around the 87th percentile. So even after the recent sell-off, those skews are still pretty big. Let's see. Over the past decade, similar percentage skew rankings have corresponded to between 2 and 4% declines in gold prices and 4 to 10% declines in silver prices over the next 3 months. So interesting stuff here. I encourage you to check this out. So even with the recent sell-off, that skew really positive, which is kind of interesting, Mr. Rhodes, because usually, when we look at skew, we kind of intuit it the other way, right? When we see things bid up to the upside or the downside, usually that means that there's a preponderance of paper in that one direction. But, skew can also be sometimes a counterintuitive, a contrarian indicator. It sounds like that's the case here. What do you think about this research here on the skew in the metals, sir?
And when VIX gets way, way, way ahead of it, and maybe that just means that that all the panicking is out, because it'd kind of be the same thing if you think about it. It's just if the out-of-the-money implied volatility on the call side or the put side for any of these types of markets that have a skew that kind of works like a teeter-totter, I'm sure that if you go back and you explore it close enough, you can probably find a level that equates to being overbought or oversold, kind of like a skew RSI. And I'm trademarking that right now because I just thought of it.
I like it. Skew RSI. Yep. Get out there.
Yep. Start to see a relative... And we've seen that, not necessarily to the peak part, but where you see a peak and then you see maybe another run that doesn't make it as high, and then that's always been a contrary indicator when you're looking at VIX versus the S&P 500 for gold, oil, silver, probably platinum too. If you see that sort of price behavior, but you're only focusing maybe on the 5% out of the money calls or 5% out of the money puts, I think it can be a good indication that either people have over-panicked and you should be like Warren Buffett and be a shark with blood in the water, or that that everybody that's hedged is done hedging now. So there's nobody left to buy.
All done hedging now. Let's check in really quickly and see if that skew analysis is still holding up this week. Pull up gold here. We'll see for ourselves. Let's look at that Dees contract. That's where the lion's share of the action was this week, listeners. 38%. Dees 1,500 calls, if you're wondering, leading. Actually, no. These were no 1,500 calls and Dees, both very active. So 1,500 calls were the order of the day, but 1,800 calls, also pretty active this week, doing 4,200 contracts out here. These coming in February, which is interesting. So if 1,500 isn't bullish enough for you, maybe 1,800 floats your boat. Let's look at the skew in particular, because that's what Eric was talking about. Last week, the puts were 8.1% cheap. This week, they're 7.8%. So the puts kind of unched. The calls, though, where he was looking, the calls last week were 13.2% risk at the money. This week, they are 12.1%. So, Mr. Rhodes, seems like that call skew coming in a little bit.
Yeah, it's it's basically a nice confirming indicator, and we've talked about this type of price behavior before, where if the price seems to be topping out a little bit, and then all of a sudden the call skew starts to be topping out as well, or the richness of the call option starts to come in, that usually is a really good confirming indicator that maybe it's time to try to put on one of those fade trades.
Yeah, Eric, I will say this. Eric has a good track record, particularly for metals vol research. That seems to be his sweet spot, gold in particular. So when Eric starts talking gold vol or gold skew, the little hairs on the back of my neck perk up, and I usually pay a second look to it. So maybe this is an interesting one. If you're trading the metals, at the very least, you owe it to yourself to check out the full report. We kind of just did a cursory overview of it here. Some of those charts are pretty interesting as well. Mr. Rhodes, before we get into some questions, I heard a little birdie told me you've been talking a little crypto of late. What's on your radar as far as crypto these days, sir?
I'm doing a lecture this afternoon on cryptocurrencies. So I was doing a little investigating on the COT report and crypto, and we don't have options yet, but gosh darn it, we're going to, I think, in the first week of January, which I'm really looking forward to, the options on the CME futures. But looking at the COT report, you can actually break out, and I tweeted this chart, you can break out the net leveraged, or the net leveraged positions, net leveraged money positions, which in simplistic terms, let's just say that's the hedge funds. And the net leveraged positions as a percentage, I like to look at these things as a percentage because the absolute numbers based on growing and shrinking open interest kind of messes the number up. When we've gotten down to about 25% net short, that seems to have been some sort of bottom in the price of Bitcoin, at least in 2019. And we hit that level a couple of weeks ago. And I know we're a little bit lower right now than we were when we hit that level. But that has been much like what we're saying about Skew, where if it gets too far to the upside or too far to the downside, that tends to show that people are leaning a little bit in one direction or another. With the Bitcoin futures, the fast money guys are net short right now. And if they're net short, at some point they got to buy. So maybe that's the idea behind eventually, the being too net short, resulting in a rally within a week or two afterwards.
So you get to explain fun things like Bitcoin and ETH and all that good stuff today over at Loyola, sir?
I do.
Well, I think we can also do a little bit of explaining of our own, if you're up for it, Mr. Rhodes, a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. It's your portion of the show. You guys take the reins, your questions, your comments. First one comes from the creatively named Tim. Tim wants to know, can we get some FX heading into Brexit? Well, you notice, Tim, a few people have asked this, and you'll notice on the top of the show there when I do kind of what's moving and shaking for the week, what's the category you don't hear in there pretty much ever is FX. You just you're not seeing the big moves out there that you're seeing in some of the other categories, which is why FX doesn't really make it to the top of our list very often. But I hear you. Never let it be said that we don't listen to our listeners. So you want a little FX? You got it. And I got to imagine, since you're talking Brexit, we probably want a little pound USD, so that's where we're going to go. Right now this week, despite all the things going on out there, not huge movements, net percentage-wise at least, off about 0.2% at a little bit shy of that 1.29 strike out there, 1.2884 to be precise out here in all things pound USD. You guys can find it, of course, heading on over to the FX section and get on down to pound USD. You can see it for yourself. The vol coming in pretty aggressively off those nearer, but these are mostly contracts on that front portion expiring in less than a couple of weeks. So let's ignore those from a vol perspective. Let's go out to where the action was this week, which was in the NOVE contract. That has a little over 2 weeks to go, so we can at least pay attention to that. 48% of the paper going up out there this week. The lion's share was in these 1.30 calls, so the 130, pretty much at the money call out here, in close to it in the pound USD, with about 1,950. So again, not a huge option story, but it's something. And of that 1,950, about nearly 1,400 going up on Wednesday, and a 400 odd today, and the rest of the week kind of quiet out there. So not a ton, slightly, looks like a decent amount of that closing. So some closing at the money, slightly upside paper here in Nove is what was leading the dance out here. Let's look at the skew a little bit. Vol coming in pretty hard here in this Nove contract as well. So, which is interesting because they were crushing Vol last week going into that vote. Sounds like the tail end of the punting of that vote and everything else. Also annihilating the Vol here this week because this Vol is in nearly 6 points. That's pretty aggressive out here. Let's look at the skew and see what's going on out here. The puts were bid last week, 2.5% rich. This week, they're nearly 9%, 8.5% rich to the at the money. The calls were cheap. They were nearly 3% cheap this week. They're almost 10% cheap. So puts getting bid, calls coming in as the vol gets annihilated here in pound USD. Mr. Rhodes, do you spend a lot of time in the FX land these days?
I do, because there is the CBOE CME FX British Pound Volatility Index, VPVIX, and it's hovering around 10. Woohoo! Which doesn't mean anything to you unless you understand where that is relative to history.
I was going to say, what does that mean?
I know. I'm getting there. I'm just backing into it. I can tell you that it was around 20 before the Brexit vote, and it spiked up into the low 30s on the Brexit vote and then came back down. It has actually done nothing but trend lower over the last 2 weeks from 15 to about 10. So at least from a currency volatility standpoint, the market's thinking that we got a nothing burger on the horizon.
Yeah, they kind of come
another
for
one, even though it's a deadline.
Exactly. Of course, you were with us on the vol show a couple of years ago, Mr. Rhodes, when they came for all the vol.
Yeah.
Before the Brexit vote, before the initial one a couple of years ago, and all of us on the show at the time were kind of scratching our chins, saying, "I don't know, if this is a judicious thing to be crushing all this vol, and the vote hasn't even happened yet." And, of course, it surprised everyone, and the vol exploded, and it turned out to not be the best thing, at least in the near term. I think if you held out, it was all right. But still, this is, I don't know, I'm not saying this is the same thing, this is analogous, but interesting to see. By the way, that ticker, listeners, if you're curious, it's BPVIX. So it's the British pound VIX here at about a 10.5 right now, off 1.2. You see, you're right. They've been coming for it pretty hard of late. Interesting stuff. This shows, Mr. Rhodes, there's a VIX for everything.
Yes, there is.
All right, let's look here. What else we got? Niles. Niles wants to know, what is the FedWatch telling us ahead of the FOMC? Any surprises? Well, I just had that up a second ago. We just talked about that earlier on the show there, Niles, but it was 93.5%, the market pricing in that probability of a 25 basis point cut. I don't think that's any surprise. I think the market's pretty firmly in that camp. But Mr. Rhodes, you're an old school Fed watcher. Any surprises to you coming out of this data here?
No, not. Actually, I hadn't been paying as much attention. Not for what's going to happen next week, and I just assume that number is going to continue to trend its way higher, and it'll be like 97 or something on the day before we get the announcement. But as we started to go farther out, because it just felt like we're in this cycle that is supposed to just keep on going, but the fact that the next greater than 50% chance, which would take us down to 1.25 to 1.5 target rate, doesn't hit until March 18th, and those odds are at about 52%. It's a coin toss, and then when you get out to April, you can take that number up to about 56, 57%. So they're definitely thinking we're on hold till March, and then it'll be interesting to see what the trend is with respect to that number. And one of the cool things they've added on the FedWatch tool is you can actually download the historical data on it and play around with it. So they share the day-to-day data behind this thing, which gives you a lot to play with.
That's manna from heaven for a guy like you, sir.
Oh, yeah.
That's what gets you. Wonder what gets Russell up at night, gets him excited. Download an FOMC data, baby. That's what it is. You can check it out. This is a great tool. I like tools where they forget about the analyst recommendations and all those other things we talk about here. We were joking about the Goldman things before, but those are all just, complete prognostication. This is actual hard data. This is where actual money is wagering, and every bit of analysis always says that real money at the end of the day is going to be the best predictor of anything out there as opposed to any sort of whisper number or anything else like that. So that's why I like FOMC and the FedWatch tool, because it shows you what real money is up to, what they're pricing in at the end of the day. All right, we got time for one more. This comes from TLLET, TLLET. He wants to know, or perhaps she, we shouldn't assume, does a high call skew always mean rally ahead? Well, no, Mr. or Mrs. TLLET. We were just talking about that with gold. And I encourage you and everybody else to check out Eric's reports. I'll get the name for you again. Here it is. Gold and silver options pointing to a pullback. That's pretty much the most stark recent example I can think of call skew not leading to a rally, but actually a demonstrable pullback. And indeed, it's a documented trend. You can go back and look at it over time. And so in many, and not in all products, I mean, obviously call skew, if it gets bid up in an equity, perhaps could be going into an earnings event, could be a small biotech before some sort of FDA announcement. There's usually a reason why those skews are getting bid up. And in the commodities, there's a bunch of reasons why that could happen as well. So when the skew's bid up, it's certainly a flag. You want to check it out and look at it. But it doesn't always mean that the bulls are in charge and everything is off to the races. In fact, it could mean quite the opposite, like gold. Eric's research, Mr. RHOADS, do you think of any other examples where, a bid call skew is more of a contrarian indicator?
No, I can think of where it would be a kind of confirming indicator if it looks like a market is petering out and the call skew starts to come in. But, Eric's a bright guy, and he's looking at a lot of things that a lot of other people don't look at. And, finding a level where, getting ahead of that petering off, that's a pretty bright move on his part.
The man's good. What can we say? All right, listeners. Unfortunately, that music means we've come to the end of another epic sojourn through the world of futures options. I'm glad you guys could join us. It's fun. Mr. RHOADS, I'm glad you could join us as well. I'm glad the TWIFO gods have smiled upon you once again. I had an interesting chat with your CEO, Mr. Morris, not too long ago at the STA conference. Didn't have nice things to say about you, but I'm glad the TWIFO gods are smiling upon you now, sir.
Yeah. Well, you can call him to do TWIFO next time.
There we go. No, he had nothing but good things to say about you, sir. So you kind of teased your forthcoming report coming up in about a week. So give us a little tease of that again, sir. And what else do you have up your sleeve over there in the land of TABB we can look forward to?
Working on that. Basically, it's just 3 different methods of using ES futures or ES options on futures together, and basically outperforming regular strategies that people look at. My favorite one is actually doing a consistent, and I use end-of-month options to get just to have monthly performance data. But my favorite one is a pretty exotic spread that I came up with that gives you lower risk but better returns than a 2 times leveraged S&P 500 ETF. I liked that one an awful lot. But it's just another product usage thing. I've also got another one coming out about block trading in the equity option market probably in the next week or two. And sometime in November, a very intricate study of everybody's favorite topic, earnings and options.
That is a good one because it's a hot one. We talk about it all the time on our option block program, indeed on our volatility views program as well. I've coerced the folks at RHOADS into giving us some data on that front, so that's always fun to check out. And Mr. RHOADS, if they want to check out all these reports you're talking about, where should they go? What should they do?
TABBforum.com.
There you go, listeners. TABBforum.com is the place to go to kick the tires and light the fires on Mr. RHOADS' research and all the other cool stuff they have cooking over there in the land of TABB. And, of course, our buddy Sean couldn't be here. Check out what they got cooking over there at FTSERussell.com. FTSERussell.com is the place to go. Give them a follow over there on the Twitters as well, at FTSE Russell. A lot of great data coming out throughout the week about all things small cap and equity, active versus passive, some of those overwrites you guys like to see and how they perform. A lot of other good stuff. FTSERussell.com is the place to go. And, of course, you know where to find all that great CME research and everything else. It's just CMEgroup.com. It's pretty easy to find. Head on over there, kick the tires. I think you're going to like this report from Eric. It's pretty fascinating and indeed somewhat counterintuitive stuff. So everyone out there who has a lot of questions about Skew, like our listener just did, it's an interesting one for you to check out. And on behalf of Mr. Rhodes and Sean who's out there gallivanting, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in all those great questions. Keep them coming. And we'll see you back here tomorrow for Volatility Views. And we set the dial back to zero again. We started all off with Monday on the option block and come back out here to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.